Hello once again, welcome to my YouTube channel and welcome to other people, all traders that you keep on subscribing and following my videos and content. This channel is very important when you are learning the history, the psychology, and the whole picture of every market. I always repeat that this strategy or this kind of price action learning, it applies to every kind of financial instrument. Whether you are trading stock, whether you are trading forex, or whether you are trading options, everywhere, even you are trading cryptocurrency. Okay? You imagine how powerful is analyzing the market for every candlestick. Some people say they don't believe that traders can determine the most probable movement of the market by means of candle because they are forex traders, most of them. But for me, as a short term trader, which is what we call, I trade, you see, I trade 1 minute. Normally I trade 1 minute, and this is possible. You can lose $1,000 for 1 minute. In 1 minute you can gain $1,000 in 1 minute. The reason why forex trader, they stick to their strategy and they stick to their what we call passion, because forex trading requires big movement. For example, okay, what can you see about this market? Okay, what can you see about this market? First, what do you remember? What is the first rule? First, you have to identify the market condition. Okay, so we will use some tool, a simple tool, which is here, a trend line. Yes. So you have to identify the market condition. So as you can see here, we have we have a we have a major we have a major uptrend. And where is the minor uptrend? The minor uptrend is here. Okay? So the minor trend is here. Okay? So it's uptrend. So what can you say about the market condition? The market condition is in the very high trend. So you already put to your mind that on my action, I have to only use a long position. When I put a trade, I have to execute only a buy trade, not a selling trade, a buy trade, a long position, because you have to follow the trend, and it is very important. Some people say, do not mind the trend, learn the price action, but price action requires a market condition. So we already identify the market condition, which is in the major height or major uptrend. So what will be the next? As you remember, the rule number 2 is you have to identify the major key levels. Okay? How to identify the major key levels? You see? You see already the major key level? Yes. You see already the major key level? We will use this horizontal line to plot the major key level. What is the major key level? Major key level is is the is the price where it is once a support and becomes a resistance, or it was before a resistance become a support. Okay, so this is a major key level that you can trust. Okay, what is a minor key level? A minor key level is like this. Okay, before was a resistance and now he is a resistance, so he is still a minor key level or a minor resistance. Okay, but after the breakout here, as you can see, after the breakout here, there is a retracement and it becomes a new support. So this line is no longer a minor key level. This will be now a major key level after the breakout and a retracement. You remember my previous video, after the breakout, there will be a retracement. it will come back again to this line to test if he still can go down. But breakout happens already, so it goes up. Okay, it goes up. So as you can see here, we have already plotted the two lines. We have, excuse me, we have the trend line, which is a uptrend, and we have the support and resistance level, which is what we call the major key level. Okay, so now what will be the next thing that you should do is you have to identify the candlestick pattern and chart pattern. Okay, so if you are a forex trader, then you see this happening. Yes, you see this happening, testing here, and here there is a breakout. Okay, so what you will do as a forex trader, you will not trade here. As I always mention to my video, when there is a breakout, do not trade buy. Do not put buy immediately. Okay, because there will be a fake breakout. You see, what is the fake breakout? I already mentioned. There is no clear rejection, or there is no clear breakout. What happened to the price? You have to wait the price to bounce back, okay? To bounce back here, okay? Or a little bit below, okay? So when you're a forex trader, you have to put your stop loss right there, and yes, so that if this price reach, then you can only risk very small. Okay, very small, and you can take your profit to the maximum. So how can you take your profit, guys? Huh? How can you determine your profit? You have to use this Fibonacci tool. Okay, so Fibonacci tool you have to use here. So everything is here, everything is given to you, the line that you can use. Okay, so let's use the Fibonacci tool to determine our take profits. So Fibonacci line, okay, so how can you determine your take profit from the lowest low? So the lowest low, then drag it up. Imagine that this area, huh? I will show to you. So imagine that this area is not still, is like this, okay? So imagine like this, okay? So you started the trade right there. So imagine this area going up is not yet visible. So what you will do to determine your take profit is that use the Fibonacci line from the lowest low to the highest high. So you have to put you see the numbers 23.6, 38.2, 50, 61.8, and 100. So what you should do, from 0 going to 23.6, you have to put the line right there. Okay, you have to put the line on the major key level. So 23.6, I put the Fibonacci level exactly on his position. So this blue line is your first level of take profit. Okay, so if you want to maximize your profit once again, then you should drag it more up, and put the 38.2 to the major key level. So 38.2 to the major key level. So this is your major key level. You align the Fibonacci level to your major key level and the 38.2. So this is your first take profit and the second take profit maximum. Okay? So what you see, so as you can see, okay, as you can see, you started to trade right there. Okay, imagine in trading in forex, you are only risking this little. You see, guys, you see, only you are risking this little. So if you reach this, then you can stop your loss, you can minimize your loss. But okay, but if this goes up, imagine how the distance of your profit compare to your loss. So this is what we call the risk and reward ratio, that you always want to win, okay? Like a casino, okay? You have to be the edge, you have to be the house. So you are only risking less and you are earning more. So the 23.6, the 23.6 is the level where you the first take profit, and the 23.6 after that, the zero. So this one, as you can see, after the price touches the zero, it goes down because this is the maximum. This is the highest. Okay, so this is the highest. See, you see. So that is a breakout. Imagine if you stretch this more, if you stretch this more and put the 50, okay, put the 50 on the major key level. So you can assume, or you can expect that the price will bounce to 23.6, then goes up and reach here. Okay, so it depends what is your risk tolerance. Okay, what is your risk and reward ratio? You are risking this small and you are expecting the high profit like this. Okay, so this is how you analyze the market. Do not depend your trading on indicators, because indicators showing the the current situation of the market. It doesn't tell you everything, okay? But this kind of explanation, which is what we call a psychology, this is being used by international, any kind of broker, financial instrument. This can be used. This is in your system. This is part of your system if you learn this kind of process. So keep liking and subscribing my videos. I hope you learned so far, and you have to remember the rules of the trading that I mentioned. Thank you very much once again.